Tax day is just around the corner. We're talking April 15th. It's the last day to file your taxes this year. And statistics show that nearly 1/3 of people wait until just before the deadline to file. A local financial professional, Tom Neumann from Drake & Associates, is here with money-saving tax filing tips. Tom, good morning to you.
Good morning. Everyone's favorite topic right away in the morning, taxes, right?
Tom, but it's a necessary thing. You know what I'm saying? Like we've got to face it.
Yep.
Listen, are there any changes from last year of filers, things that they should know?
The biggest change was the actual brackets themselves. Because of inflation over the past couple of years, the IRS shifted those tax brackets up by about 7%. So tax filers should check the current tax brackets against their taxable income just to make sure that they calculate their taxes correctly. The other thing is the standard deduction did go up. So you want to be aware of that. And for those who possibly bought a vehicle in 2023, there is a tax break of close to $7,500 under the clean vehicle tax credit. So those are just some of the changes from previous year.
Okay. Now, here's something we need to know. What are those common mistakes when we're filing our taxes?
The first one is paper filing. I always recommend, to anybody that we're working with that you should file electronically and choose direct deposit instead of doing that paper. It's just easier to catch mistakes when you file electronically because the computer is actually doing the math for you. And when there are mistakes, they trigger a manual review at the IRS, which can add a significant delay to getting your refund. So that's one thing. The other thing I would say is just math errors. I know it's just, addition, subtraction, things like that. But these are the most common mistakes that people make when doing their taxes is just getting the math wrong. If you're lucky, you'll conclude that you may owe more or less, and the IRS will catch that. But it's always a delay if it's done manually and there's more math errors. If you are overpaying, filing at the last minute means you often don't have the time to find maybe other deductions that others are using, such as making contributions to an IRA or a 401k, that can go all the way through the tax filing deadline. So you just want to start early if at all possible.
Okay, well, how can we get an extension if we can't meet that deadline?
You can get an extension that would give you out until October 15th. All you really need to do is let the IRS know that you need that extension. However, that only counts for the paperwork that's included for your tax return. If you're in a position where you actually owe taxes, that is still due by the tax deadline of April 15th. So that's just one way in which you can potentially get some more time.
Okay. And how can we set ourselves up for success in the future?
Like I mentioned before, starting early is always the best solution. March, April is always considered the normal tax season, but it's better to think about tax planning the entire year. That way you can avoid unpleasant surprises come April, and you might even save yourself some money. So starting early is really good. Oftentimes, adjusting your withholdings. So if you are in a position where you're getting a massive refund, you actually overpaid your taxes on your income for the year, and you gave the government a tax-free loan. That's not necessarily the best use of your hard-earned money. So adjusting your withholding appropriately. On the flip side, if you're in a position where you owe a lot of money, then you might need to adjust your withholding so that more taxes are taken out each paycheck. Always when it comes to planning, it's always about doing it ahead of time. You can find out a lot of information at our website, which is wealthwisconsin.com.
All righty, Tom, we appreciate you as always. Thank you so much.
Yeah, my pleasure. Thank you.